Je sais que j'ai vu dans le groupe, tu as dit que tu es en position de bail.
Ouais, il a mis une position de bail temporairement. Il m'a mis à peut-être liquider ça. Non, il n'est pas encore sorti. Je ne suis pas encore sorti dedans. Mais ça va shooter, ça va continuer à shooter aujourd'hui. Ah, fuck. Attends, donc on commence. La bêtise, il pas close tous mes buy positions.
Moi, j'ai eu un souci.
Je
L'affaire là me dérange même souvent. Ça me dérange même toujours même.
pas comme ça.
Du genre, tu vois où tu as pris la position, n'est-ce pas?
Mhm.
Là-bas en haut.
Oui.
Et le coup, quand on parlait, tu expliquais, genre, ça pouvait remonter avant de redescendre. Donc, au lieu de garder les positions, j'ai fait du genre, j'ai coupé. Et puis, j'attendais que ça revienne dans une zone plus haut, mais ça a plutôt celle jusqu'à aujourd'hui.
Je t'ai dit que, normalement, que le marché s'y a ça, normalement, il ne m'attendait même pas.
Donc, au lieu de garder les positions là et peut-être faire le
Parce que
break-even et tout, et
regarde,
tout.
like, look at what is here, right? We're gonna have, like, this market is gonna keep selling because look at, this is 4 hour bearish confirmation for a bearish move. Okay. So even if the market wants to reverse, right? Remember yesterday on our class, I told you something about today's closing candlestick will determine the overall direction of the market. And look at what happened. It closed. I was saying that if today's candlestick closed bearish, it will confirm that the market, the bear has taken over this market.
Mhm.
Now look at what happened during Asian session. This news during this movement that to the downside during Asian session was caused by AUD news at 1 a.m. This is it. We had AUD news at 1:30 a.m. So it engineered this movement. It's what engineered this temporarily. This fast sell down. Now we still have another news at the 2:30, right? 2:30 p.m. We'll have another news here, and it's all red for them. So it's still going to impact the market. And now seeing that we're trading off of the 4 hour time frame for confirmation, now it has formed what a 4 hour bearish order block. It seeped into this 4 hour bearish order block and sold. Now it came back to form another bearish order block here. Now it's way deeper than this, right? Now
Mhm.
remember when I was telling you about remember when I was telling you about support and resistance in this consolidation area when we box this area, right?
Yes.
Yes. Now this is what has happened. As good as we are learning and it's occurring right in front of your eyes. Now this was the rectangle that I drew. This was the box that I drew here, right? I drew this box here and here. And I told you this was our trading zone. Now remember I told you the first move outside of that box is the fake move, right?
Mhm.
Now this is what the market did. The market came here, consolidating, bought into that zone. Everybody thought that the market was going to keep buying above. Look at what the market did. Came back, sold, right? After it sold, it retraced back, building more buy orders for people to think that it's going to keep going higher. And what happened? It collapsed aggressively. What was our target that I told you? These lows and this double bottom that is here. That is here, this support that is here that the market was having a hard time breaking it. Now that the market has broken it, look at what happened. The market, and I know you don't understand. I had a sell here, but probably you don't understand why I took that sell, right? I'm going to explain why I had a sell here when everybody else were looking for a buy opportunity. Now, after the market takes out this low, that a lot of people thought that it was a support area that the market will bounce off of. If you go to the lower time frame, when the market breaks this low, what it does is it comes back. If it has to continue to sell like what we're about to have today, because if one to sell, it will sell for like, again, what can we say, like another 80 or 100 p. to this bullish order, 4-hour bullish order block before we might see some kind of support area where the market would be facing some hard time to break this area, right? Now, when this market breaks this immediate support zone, this immediate discount area that we are at right now, what happened is when the market breaks this area, a lot of people think the market is going to keep buying. So they will have their buy orders here and their stop loss will be somewhere below this area. You know the drill, 50 pips stop loss, 30 pips stop loss maximum, right? Now, when they buy this market buy above, what happened is the market reach out to that target. Now, us as the institutional trader that we have been focusing on this move and we understand what price is doing more than they do, we will be buying to their stops. Now, when the market sold, what did the market do? It came back because this was the discount area that has become a premium. Now, this discount, breaking the discount for the market to keep continue doing anything, it needs to come back and reprice institutional buy order flow that they had here so that they would remove their buy orders and accumulate more sell orders for the market, for them to keep driving the market low. So when you come here, you go now to the 1 hour time frame, you see what happened in this specific area. The 1 hour time frame bought into that area of the low and collapse. Now, when it's collapsing, what does it form now for us? The 4-hour bearish order block, right? Now, if I'm going to send this right now in the channel, a sell signal, and we're going to hold this for the next 4 hours. That is from 12, 1, and 3. 12, 1, 2, 3. No, 12, 1, 2. 11, 12, 1, 2, 3. Yes, for the next 4 hours for us to see how the market will deliver. So we'll take our short position, we'll enter it here. Okay. Put our TP here. Okay, so this will be our trade for today. Now, if you go to the 1 hour time frame, okay, that is our sell signal. I had a lot of people reach out to me. Le gars me dit que, gars, c'est quel genre de swing trade ça, non, gars, merde, comment est-ce que tu fais ça? Je dis que, gars, c'est du taf, frère. C'est du taf. C'est du taf, c'est du taf. So what I was saying is, well, I'm expecting this market to sell below this area and reach out for sell side liquidity. Since we are already at a discount market on our trading range, the market has come and takes back the discount that the discount area that it break in. There's a huge possibility for a bearish continuation. Now, retail traders, let me show you again something on a 1 hour time frame why when we are overall bearish, the bullish order blocks will fail. Remember I said that, right? Now, having noticed that, look at how all the bullish order blocks here failed and it still sold aggressively. Now I'm going to show you something very interesting on this area on the 1 hour time frame, right? Let's box this area like this. Now on this area on the 1 hour time frame, if we go to the 15-minute, you will notice that the market was on an uptrend here. Now, retail traders, what do they know about uptrend? They just like to keep buying uptrend. They they create a diagonal line in their imagination, thinking that the market is going to keep buying above, right? I think we've seen these in my explanation of what I think of, I've made a video of these, but I can't really recall it. But if I haven't, we're still going to talk about this, right? So anyway, speaking of which, we are going to talk about it right now when we'll be having a conversation about mitigation block. Because today we're going to talk about mitigation block. We're going to talk about breaker block and how they form. And we're going to talk about liquidity void and liquidity pool. That is if we have enough time. I hope we do. So you see that the market was bouncing off of an imaginary diagonal line, and it was creating more buy in the market because they thought that what is happening now will keep happening in the future, like everyone else does, and especially crypto gurus. That's what they always think. What is happening now will keep happening in the future. Higher high, higher lows, higher high, higher lows, higher high, right? So the last high, this high normally it failed to make a new higher high because our overall directional bias was bearishness. Now look at when these traders that were buying these trend, where was their stop loss residing? Below these lows, below these higher lows. Now look at how the market sold aggressively towards those targets before the market even continued selling. Look how the market sold aggressively, right? The market really did sold aggressively. It didn't, like I said, when the institution wants to get into the market, they don't give opportunity for retail traders. And I think we had that conversation before this market literally delivered the way it did. So the market delivered aggressively towards the target, a little retracement, and it still delivered. Now observe something very, very interesting. Very interesting. I want you to keep an eye on this area, right? And you'll see how price will come back to that area to reprice it. Are you following me? Are you with me?
Yeah.
Okay, great. Just wanted to make sure. Now look at this gap that we had here on a 15-minute time frame. Look at it. This gap between this area and this candlestick. This candlestick close and this candlestick opening. That gap, right? Be very vigilant because in the nearest future, the market is going to come back to this price. So we're going to take another rectangle. Oh, yes, box this area, right? That is a gap that the market has created. That is a gap that the market has created. Now, this market has a huge upside potential. This market has a huge possibility of coming back to this area to reprice this gap that it has taken. But now, before that, we need to see a run on liquidity because this buy is having some liquidity residing over here. And on our overall directional bias, we have a low, an overall 4-hour sell signal that is residing somewhere around this area. Now, in the nearest future, when we will be buying this market, we already have a key area where the market might find some resistance breaking it. This area or a point of reference where we should be taking our future TP when we'll be buying this market. I hope you're following out. Now,
Yeah.
before the market needs to do that, it needs to reach out for the sell side liquidity that's still residing on our 1-hour time frame. Oh, let's go to the 4-hour time frame. Exactly. On a 4-hour time frame, when this market would sell to this area, let's put a horizontal line here. When this market would sell to this 144,859 area, when we will be buying this market, this will be our target. We would like to see a return in the weekly bearish order block that we have right here. And maybe that is where the market will continue selling, or we might see a bullish continuation on this trade. But other than that, we want to first of all see what the market delivers here today, right now. Now, when we'll be buying this market in the future, we would have a target because the market needs to always fill the gap. Now, if it needs to fill the gap, we first of all need to see one or two things happening. So when we will be in this bull trade, we'll have something like this and this. right? So you'll be risking what? I think 50 pips for another 200 pips, 1:4 risk to reward. So now waiting for this trade to form is another issue that not everybody has the skills to. But now understanding that today we would see a sell from this market towards this our bearish target, that actually should consolidate our impatient for us to be more patient in waiting for our buy model to form. So these actually we should just be either we should be in the sell position or we should not be entering a buy position because we are scared that the market will not reach to a point of interest. And or if you are scared that you'll not be up at time to catch this trade when the market sells aggressively due to maybe news or one or two factors, you can place your buy stop here. Do you know how to place buy stops?
Mm-hmm.
Yeah, you can place your buy stop here and your stop loss should be maybe 154, 300 on USD JPY. That would be maybe your stop. So you place your buy here at the buy stop at the 154, 859 level, and your stop loss would be around 154, 350 level. So that would be your trade setup for the long position coming in the nearest future. Now, speaking of which, today we are going to be talking about mitigation block and how mitigation block are formed. Now, it's interesting how I think you caught me ahead of time and we had this conversation about mitigation block without us even reaching towards these areas. So what are mitigation block? What are mitigation block, which is the resistance level and anticipated bearish reference point, right? We'll be speaking that because we have these in mind. So like I was explaining to you the last time, mitigation block is the last, like for instance here, this was the last bearish candlestick before this bullish movement, and we saw this aggressive collapse. Now, when we'll be buying this market back above, if we want to see this market mitigate its losses and keep selling back below, we want to see this market buy back into this area. Now look at this coincidence. This mitigation block coincide a little with this gap that is created here. So when this market will reach at this area, we will not just collapse because we have this gap here. Perhaps we could still buy into these to reach 50% of this mitigation block before they will have a sell continuation or some rejection off of that area. So this short-term rally, mitigation block, like I was saying, is when price returns to like okay, we are going to put this let's draw this. Oh, what can I take? The brush. Yes. Let's say this is like an M, right?
Mm-hmm.
We'll list this area point A. This area will be no. This is too big. Um, that area will be point A. Point A. And this high, this high here will be point B. And these, oh, sorry. These maybe okay. This is the imaginary area where we expect this market to reach because, okay, this area will be point C. Okay, great. Now, when price action, right? When price action returns to point A, which is this our point A, which is our mitigation block. When price action returns to A, point of reference, the long position taken from point A to point B. This long position taken from point A to point B. The long position taken from point A to point B price swing will have an opportunity to liquidate or mitigate the net losses that are caused when price drops from point B to point C. So let me take this all over again. The long position taken from point A, this buy position taken from point A to point B, the long position taken from point A to point B price swing will have an opportunity to liquidate or mitigate the net loss. That is the net loss. These people or the institution that are buying this position, they will have the opportunity to mitigate the net loss that occurred from the drop, that is from this sell from point B to C. So this sell will have the opportunity to mitigate their losses. That is the market will return back to this point, to point A, to mitigate those losses and keep dropping. These can result in a new lower price swing to point C, which is this area. After the market comes back to point A to mitigate those losses, it can result to a lower swing price to point C from retesting the significant significant lower price into the support level under the market price. So after this point reaches to mitigate these losses here, a lower in price will be to support the level under market price, which could be, that is, the market could find support in areas where we have a bullish order block, we have a sell fair value gap that was created that the market filled and it didn't deem it necessary, or the market has find support in that area at the discount market where it can break that level. Those are the point of reference, right? That is the definition of mitigation block. Now, the short-term rally from this point, let me take another rectangle. And please feel free to ask your questions. That is a short-term rally in this. Okay, exactly. Now we box this area because this is our mitigation block here. This last bearish candlestick before this bull run and the aggressive collapse. So the short-term rally in price highlights a significant institutional reference point known as mitigation block. That is, if this market rally back to this upside in price, it simply means that this point, which is this area, I'm going to take I want to take something else so that I can point that out and list it. I need an arrow. Okay, this last point here, okay, great. So the short-term rally in the price highlights a significant institutional reference point known as mitigation block. This is the mitigation block here when this market will rally back to this upside. I'll rally back from this upside from this, our point of interest that we have here after it reached this area before rallying back up, right? Now, this box area is known as a very sensitive area for the market to actually reject from whenever we see price come back to this area. Now, so once price post a market shift lower, your attention moves to this specific low in price action. So when price move lower, exactly when price move from this area lower, your attention would move to this significant low in price action. That will actually eventually mean that the institution are slowly taking over control in sell side liquidity for the sell to keep going on. Now, this is a mitigation block on a sell market. We have mitigation block on a bull market as well. Now, it depends on which, everything that I'm teaching you right now is just the reverse on a bull market. So when you look at this video, when you study this video keenly, make sure you, if you want to apply it on the bull market, just do the reverse of this. You would see how it will deliver exactly the same.
Okay.
Yeah, so this is actually very important, and you should know that because in every, like in most of the shift in market structure or market reversal, right? When you see a market has been on an uptrend or on a downtrend for a very long time, when the institution wants to switch its gear from the bull trend, this is what you see happen. When the market sells aggressively, it creates a mitigation block that the institution will come back to that specific area in the nearest future to reprice and either keep selling or we see a buy confirmation. So these are very important if you want to be trading this kind of market. And understanding a switch in trend, a switch in, well, yes, this is very important if you want to understand a switch in market trend. So you should keep that is very important. So now I'm going to teach you now for you to be flexible for the viewers that are viewing this. I'm going to show you guys. I'm going to explain the breaker block now. Now I will explain the breaker block using a buy model so that since I've already used the mitigation block using the sell model, I want to explain the breaker block using the buy model so that it will be easy for you to do the reverse on these tools to get the opposite direction of the specific trend that you'll be trading in the nearest future. So we're going to wipe this all out and keep our charts clean. Remember this our area. Exactly. Now we're going to trade the breaker block from this area so that you understand very, very keenly. So a bullish breaker is a range or a up close candle in the most recent swing high prior to an old low being violated. The seller that sold this low and later sees the same swing high violated will look to mitigate losses. Now, when it mitigates losses, price returns back to the swing high. So these price return back to the swing high to these in a bullish trade setup. Now, in as much as I could still use this as a mitigation block, right? Because if this market, when this market sells to this area and it buys back into these low here, that will be our mitigation block. But now let me use this to explain more. Now, a mitigation block is something happening like on a mitigation block also, a breaker block always happen on a market reversal area also. Now, these are the two things you're going to see on market when the trends want to switch. You either see if you miss the initial sell point or the initial buy point in a market in a reversing trend, what you want to wait for the market to do is a comeback into either a breaker block or a mitigation block or a swing point to give you another opportunity to be able to capitalize in that same market and catch up if you missed that opportunity. So let's take our brush and we do this, right? We do these, we'll have these. Oh my God. A very bad hand drawing. These, 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 right? No, it's not well drawn. I'm going to redraw it back. We'll have these, 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 and we have this. Wow, exactly. And we have these now. Then these. Great, great. This is great. So what is a breaker block? Now, here we had a double bottom. So in most area where you will see a breaker block being respected, you will have something like this is for a bullish setup. For a bullish setup, you will have something like a head and shoulder formation. You have like a left shoulder, head, and right shoulder being formed, and the market buys into that direction. But now we are not trading head or shoulder. We're not trading patterns. We are not those kind of traders. So a mitigation block is when you go to our lower time frame. Oh, sorry. Okay. On the lower time frame, it becomes even more interesting. On the lower time frame, you have this area and this area and this area. So we had a lower low. We had this is the head. We have the right shoulder and the left shoulder. Now the right shoulder and the left shoulder forms the head and shoulder, inverted head and shoulder pattern. Once the market breaks out of this head and shoulder pattern and come back and retest this high, this last bearish candlestick becomes the breaker block. Because look at what happened. Look at what happened in price. Look at what happened immediately price shift into this area. And remember one thing, when we were looking at this candle, we were on a weekly, checking on a weekly what the market is doing on a weekly. Here, oh, it's gone. Let's go to the daily. Maybe we'll have a clearer picture. Okay, we were looking on a daily, on a weekly, we were on a weekly bullish order block somewhere around this area. And we said we didn't deem it necessary to buy at this point because we were on the bullish order block because the market could seek sell side liquidity before any bull confirmation. So we decided to stay out. Now, what actually happened on the 1 hour time frame was an opportunity for you to see these as a buy continuation. Because if you were trading institutional price action and understanding what the market is doing, you should have been able to capitalize out of this, even if you missed this movement buying on this swing up daily point bullish order block. Even if you miss this opportunity buying on this swing bullish order block here, you missed the second opportunity getting in here when the market came back to the bullish order block here. And what you could have waited to do is to, after this swing area, a run, because the market shift, this was a shift in market structure. Immediately the market shift in the market structure, the market always come back to its breakout block because this candle, this last bullish candle here, before this bearish move into the bullish order block to gain more bullish momentum to break through the recent high that it created, that last bearish candlestick, or that large bullish candlestick before this bearish movement becomes the breaker block. So when the market comes back into that area, it gains more bullish momentum to go back to the upside. So a return into this area gives you your buy opportunity. So the ideal setup, actually, the idea setup for bearish breaker block, this is for like, this one is for bullish other block. The idea setup for bearish breaker is a bearish range or down close candle in the most recent swing low. That was the reverse of this. This was for the most recent swing high, because we're looking for a bullish breaker block. But on the buying market, the bearish breaker is the bearish range or down close candle in the most recent swing low. In the most recent swing low prior to an old high being violated. We will look to mitigate losses when price returns back to the swing low. This is a bearish trade setup worth considering. So since we're looking now for a buying setup, a return into these last swing being violated, this bullish swing, because on the buying model we're looking for a bearish swing, but a return into these bullish swing should be a trade setup being worth considering. Now, the ideal area for you to be able to put your stop loss should be somewhere around these low, or I don't want to say somewhere around this area, because the market can see also come back rapidly to get maybe based off of news or something, I don't know, to get more bullish momentum and before spiking back above, like what happened here. But an ideal zone of point of reference for you to put your stop loss should be on the previous right shoulder that the market formed. That should be your ideal key point of reference for you to be able to look for a sell setup. I don't know if you're still here with me. Hello?
Yes?
You dors?
Non.
Oh, la fatigue t'a pris.
Je suis là, je suis à l'écoute.
Okay, great. We have a minute before this class finishes, so I'm going to stop this and resend you a new Zoom so that will continue.
All right.